What's going on, guys? My name's Hayden Crabtree. I'm a real estate investor. I'm the author of these books. I'm the founder of My Property Stats, but most importantly, I am a real estate investor and everything I do is around real estate investing. Now, I am 26 years old. I have done around $50 million of real estate transactions, but most importantly is I've lived in the state of Georgia my entire life, and I have done real estate project investments in 5 different states at this point. I've done projects in South Carolina, Georgia, Florida, Alabama, and Mississippi, 5 different states. So I wanted to make a video because one of the things I hear most often is, I want to get started, but there's not deals around me. So we're going to talk about 3 actionable steps you can take to start investing long distance. Now, the real estate guys, I heard it from them first. I'm not sure who actually came up with it, but they say live where you want to live and invest where the numbers make sense. All right, so there are 3 steps. The first step, really before even looking at a deal, what I'll do if I have a deal, I find a deal, someone talks to me about a deal, the first thing I'll do is to look at the market demographics. So when I say market demographics, what am I talking about? Number 1, most importantly, is population. I just want to do a quick screen share with you, and what I'm going to do is I'm going to show you what it means to kind of research this and how you can do this easily. So let's say that somebody brings me a deal, and let's say if it's in Murfreesboro, Tennessee. So what I'm going to do here is I'm just going to go to Google and I'm going to do Murfreesboro. I'm not the best at spelling here. I'm pretty good at math though. Murfreesboro, Tennessee population. Okay, so Google will help me out here, and then they're going to pull this data right here. You can see it says source United States Census Bureau. Now you can dive into the US Census absolutely free, and there's a plethora of data inside of there that I love to look at. Now what this is going to do is it's going to show me through time. You can see right here, it'll tell you the year. I'm going to put my cursor back over, but you can see kind of in this bottom right section, it'll tell you the year that you're on. So in 2011, they had 106,000, 12, 109, 111, 114. So what I'm seeing here is that the graph is up and to the right. That's really, really good. Now let's compare that to a different place. So let's say Gloversville, New York population. So what we see here, if we go to Gloversville, New York, is that we start out at 15,643 people in 2011, and as time goes on, it goes down and down and down and down and down. This is a market I would not get into. A declining population is a really, really bad thing for your real estate investments. Why? Because real estate is all about providing a space, no matter what kind of space it is, providing a space to a tenant, okay? Providing a space to a tenant. The less people that are around, the less tenants there are. Like maybe the one exception to this is like farmland, because you could produce stuff and then kind of drive it out. So like maybe that's the one exception to this. But for most investments that we're going to be talking about, most investments that we're going to be doing, you need to have people. The less people, the lower your rental rates will go, supply and demand, the less end buyers it will be. It's just bad news all around. So that's the first thing I want to check out. And then I want to come in and I want to check out the median household income. Okay, so it says here, according to, this is datausa.io, we could dive into census.gov and really get in there, but the median is 38,000, right? 38,620. That is well below what the national average is. So I want to understand how many people are there, is it going up and down, and how much money do these people make? That is the first step, guys. If you're looking at any market, make sure the population is going up and to the right, and make sure that it's not a town with no money, right? Let's look at Murfreesboro, Tennessee, on the same thing. Murfreesboro, Tennessee, median household income. Let's just check. 60,683. So they're right there in line with, the average American, which is good. Like, we don't always have to invest in super high income places. The middle of the road or a little bit below it or above it is where I want to be. I don't want to be at half of the median income, okay? So that's the first thing I'm going to do, is I'm going to know the market demographics super quick. That's what I'm going to check out. And again, you saw it took me less than a minute to look at both of those. Number 2, here's what we're going to do. I want to look at the market politics, okay? What do I mean by that? Well, depending on what kind of investment you're going to do, the politics of the market matter a lot. So let's take for a second, if we were just doing rental houses or apartments, one of the big pieces of that is the processes of evicting somebody. And the process of evicting somebody who's not paying really changes from state to state, from county to county. And so I've even found places like within Georgia, two counties right beside each other, Athens, Clark County, which is where I got started, University of Georgia, their eviction court was horrible. It was a really anti-landlord eviction court versus if you went to the county over, which was at Winder, Georgia, I think it's Barrow County, they were super landlord friendly. If somebody was getting evicted, they'd almost always rule in favor of the landlord. And so you just want to know the politics of what's going on inside of that. Are they pro-landlord friendly or not? Now, if you're not doing rentals like that, if you're doing storage units, you want to know what is their process to auction off tenants, right? So if I'm looking at a self-storage facility, I will go and I'll look up and probably contact a local lawyer in whatever like county jurisdiction that I'm in to say, hey, what is the self-storage auction lien laws in this area, right? Just to know, are they going to be easy to deal with? Or are they going to be hard to deal with? And we're also just want to know, hey, are we a red? Are we a blue? Not that whatever your personal politics are, the red side of the local governments are always more pro-business friendly, right? Think about the difference in owning rental property through the pandemic, right? If you think about that process, some people were able to evict, within 30, 60 days after the initial. Some people, laid off, like California, New York, laid off evictions for like a year. The tenant could just stay in there and not pay you and have no repercussions of getting kicked out. So just, you want to know the local politics. One of the best ways you can do it is just call down to the local courthouse, say, hey, I have questions about your eviction court process. Hey, I have questions about, your lien law process. And you can also, one of the pro tips is get in a local Facebook group. So go to Facebook and again, I would type in, like Murfreesboro, Tennessee, real estate investing group. And I would try to find a couple of those if I was thinking about doing a deal there. And I would post in there, hey, what's everybody's experience been with evicting in Murfreesboro, right? So that's just an example. So that is the second tip, is to know the politics. The third tip, and probably the most important tip, is to build a team. And a team consists of a lot of different people. Now, you don't always have to build a team in terms of you need a new tax guy, you need a new real estate agent, you need a new contractor. It really depends on the project you're doing. But no matter what kind of project you're doing, you always need a key team member. A key team member is somebody you could call and you could depend on. So in some cases, that'll be your property manager, a person you can call and you can depend on. Some places, that'll be your real estate agent. In some places, on some projects, that'll be your contractor, right? It's not your key contact, your key team member is not always going to be the same person, right? I'm not telling you your key contact always has to be a realtor or your key contact always has to be a contractor. You just need somebody in that market that you can rely on depending on how far away you are from that deal. Now, if you're an hour, 2 hours away from the deal, you can probably be that key contact. If things melt down, then you can rely on yourself to go there. But let's say you live in California and you're investing in Tennessee, you can't just at a whim, go out there. Sure, you can, you can catch a flight, but if something urgent's needed, you want somebody that you can contact to really make that happen fast and be responsive. So how do we build those key contacts? Well, it's about what kind of project we're doing. If I'm doing a development project, I want my builder, my general contractor, my contractor to be that key person because they have to know so many of the ins and outs. If I am flipping a house where I have to, I know that I'm going to sell the property, I probably want a realtor to be my key contact. And how do we go about finding these key contacts? It's really simple. Again, I'll get into those Facebook groups. I'll ask for recommendations. The other thing I'll do is I'll just get on Google. I'll find the top 10 people that come up and I'll start calling them. Most of the time, I'm going to call, I'm going to leave everybody a voicemail and I'm going to shoot them a text message. If you shoot 10 realtors a text message, 10 contractors a text message or call them, it's all about responsiveness. Is this somebody who's showing responsiveness, the willingness to do business from the get-go? Now, that's not always 100%, absolutely accurate that the person's going to be reliable, but a lot of times the writing is on the wall with these people and in these relationships you have. So building a team is ultra important if you're going to invest long distance. Doesn't mean from day one, you can say, well, I got an amazing deal, but I'm not going to do this because I don't have a key team member in this market. Again, if I live in California, invest in Tennessee, doesn't mean I'm not going to do a deal, because I might have another investor there and I might decide to team up with another investor who does have a team in place. It's all about figuring out, I've got a great deal. I need to make sure if I'm going to do this deal, I'm willing to put in the work to build a key team member and a team around that I need. So those are my 3 tips if you want to be a long distance real estate investor, because realistically, the properties within 1 to 2 hour drive of you are much, much smaller than everything else that's out there to invest in. So I hope this was helpful. If it was, hit the like button, share it with the friends who need it, subscribe to the channel, and I'll see you in the next video.